Hello and welcome, everybody. Happy Friday, Casual Friday edition, and episode number 3 of our Step into Sectors series. Today, I have an awesome webinar planned for you all, because we're going to get to talk about a new idea for this third step, and with that, also get to improve upon a matrix strategy that we've shared in the past, and we're going to put what we learned today immediately into practice and see how we can use it to improve matrix strategies. So, lots of show and tell, but we're also gonna get our hands dirty a little bit today and really improve on a strategy. So I'm extremely excited to share what I have prepared for you all. So let's get straight into it with our disclaimer. Not fun, but we gotta do it. When we are talking about these webinars, please remember everything we share is meant for educational purposes only. We are using historical data to try and learn what might happen in the future. But whenever we do, past results never guarantee future performance, so please, always do your own research prior to making any investment decisions. I'm trying to see if I can get the flickering in the background to slow down. I think we're going to have to just go with it. So, today is step number 3 of Step into Sectors. So we're going to start off by reviewing a little bit about what we talked about in part 2, and then we're going to get into story time. Today I'm going to get to share a story with you and take you all on this journey together. So through this story we're going to cover the material for part number 3, and at the very end we'll talk about what's coming up next for part number 4 of Step into Sectors. So let's start off with a review of part 2. In part 2, we talked about backtesting. We talked about what backtesting is, and that backtesting is a way of testing a trading strategy over historical data to see how well it would have done in the past. Remember, past results don't guarantee that a strategy is going to do the same in the future, but we need data. And because none of us have a magic ball, or the ability to see into the future. If you do, what's the Powerball numbers for next week? We need to use historical data for our tests. So this is how we use historical data. Now, we talked about how you can set up a backtest using Sectors Made Simple with our backtesting engine available to Sectors Made Simple subscribers. And we added the strategy that we learned from step number 1 to the backtesting engine to see its results in real time. So we got to see how well that strategy has done compared to the S&P 500, and we ended that webinar by sharing that this matrix strategy can be used in more ways than just trading during market hours. In fact, as long as you're still using Wednesday's matrix, that was the important part, was we need to use Wednesday's matrix to make our decisions for this strategy. Because if we use Tuesdays or Fridays, it greatly changes the results of that backtest. So as long as the backtest used Wednesday's matrix data, we found that you can trade with market open prices on Thursday or Friday with similar levels of success to each other and much greater results than what you would get if you were just investing in the S&P 500. So now, what do I have planned for you all today? Here are some questions that we will aim to answer in today's webinar. I can't trade Thursdays. I don't want to deal with that. Can I trade other days of the week? Are there strategies I can use for other days of the week? Then, what do we do if our sector rotation strategy isn't really doing what we want and need it to do? And then, if that's the case, do you have to wait for me to tell you what the better strategy is or how we should change the strategy? Or can you make those adjustments and test those changes yourself? Then, what are the options that we have for these adjustments? What can we change? Where can we change them? And finally, what is the best way to test these different changes that we could make? A lot of these questions are similar but are all asking slightly different things around the same topic. The topic being, how do we improve our matrix strategies, and how can you have the power to make these changes and test these changes for yourself? Now, if you're extremely aware and very acute, you might have noticed that we're not talking about exporting backtesting data today. In the end of part 2 of step 2, we talked that we would be covering today exporting backtesting data and sticking it into Google Sheets and Excel for analysis. This topic is still coming, but this is step into sectors, not step leap into sectors. We still want to take things step by step. And this topic we didn't want to rush through, and we wanted to dedicate the entirety of the webinar today to sharing this story and getting to take you on this journey together. So, exporting backtesting returns will be coming up as part 4 of this series. So next Friday, which will be September 29th. Because, again, today, it's story time, and I've got a story for you all. To start off the story, we have to go back a long time ago to the ancient year and month of April 2023. Back in April 2023, we started a series called the SMS Strategy Cookbook. This series was aimed at providing you a way of starting to invest with Sectors Made Simple and giving you different strategies that you could use that use Sectors Made Simple to invest in simple ways. The strategy that we shared in part 1 of this series was one of the handful of strategies that we discovered and showed off in the SMS Strategy Cookbook series. So this series truly was an introduction for many into matrix strategies, and to try and differentiate the strategies from each other, we graded them on a number of different factors. Some of these were how long the strategy takes to use, how difficult is the strategy to understand and to learn, how much can the strategy be changed or tweaked but still give similar results, and more. So if you are a Sectors Made Simple subscriber and you want to get the whole story on these strategies, go check out the SMS Strategy Cookbook series. But we're going to continue here, assuming you have not watched that, and we're going to show you some improvements to one of the strategies that we covered in this series, because that is going to be the focus for today. What we're going to be looking at is what the title of that webinar was a matrix strategy for any day. The goal here was to find a strategy that didn't rely on trading Wednesday's matrix and only Wednesday's matrix. If you go off to the left or to the right, it's a steep cliff. We wanted to find something more flexible. Now, realistically, this isn't a fairy tale. This isn't some magic castle. Strategies are real. The results we're looking at are real. So while every day did have positive results, there were some days that were better than others. So the reality of it is, the strategy that we shared performed the best on Mondays and Tuesdays. So when you're investing on Monday using the matrix from Friday, or you're investing on Tuesday using the matrix from Monday. This was what I had always planned on sharing in this webinar. And originally, I'd planned on sharing the results of these strategies to answer the first question that we posed in this webinar. Are there strategies that trade on different days of the week? Are there strategies? Yes, there are, but it's a little bit different than the strategy that we shared in step 1. So here's the steps. And before you start grabbing out a pen and paper, no need to do that right now. Let's just story time. No need to note take. So here are the steps for that strategy. This strategy trades during the trading day, just like any backtesting results that we look at they use close prices for those days. As a result, if you want results close or almost identical to the backtesting results, that would be trading as close to market close as possible. So, trades during the trading day, close to market close. It looks at the 2-week momentum table, and what we're going to do is instead of sorting by X count, which is our short-term strength, we're going to sort by our positive trend, long-term strength. We're going to look at sectors who have positive trend momentums of 3 or more. And we would buy the top 2 sectors. Top 2 sectors. Now, if there's only one sector that has an X count momentum, a positive trend momentum of 3 or more, that would be the only sector for the week. But if 2 did have a positive trend momentum of 3 or more, we would split our portfolio 50-50 between those 2 sectors. Now, if there is a tie for second place, we can break that tie by looking at the matrix. So we would go to the matrix and take the one that has the highest total count. With this, we only need to look at a single chart. We're only looking at momentum. There's no check and verifying going on here. Sort momentum by positive trend. As long as those positive trend momentums for 2 weeks are 3 or more, buy the top 2. If only one sector has a positive trend momentum of 3 or more, only buy one. If no sector does, it would hold cash. So, instead of trying to explain to you the results of this strategy, we understand backtesting. Let's go backtest these strategies together. Now, for some point of reference, in the SMS Strategy Cookbook series, we did those episodes in April of 2023. The results for those strategies, so we have a point of comparison from how it did then to now. From the beginning of January 2022 to April 2023, the strategy had 29.6% return if traded on Mondays, 30.68% return if traded on Tuesdays. Let's go and run that backtest together and see how these numbers have changed over time. This should look familiar to us, but we're going to step through it step by step so we understand and we're together on everything. Start date. We want to go back to the beginning of January. The day of the week matters because that's our rebalance day. So if we want to test a Monday trading strategy, we need our backtest to start on a Monday. End date, we're going to leave it as today. Top sectors each period. Remember, this one trades 2 sectors per week. So top sectors each period, 2. The first condition is positive trend momentum, 3 or more for the 2-week momentum. And then as our tiebreaker, we're going to use total count. So those are the 2 conditions that we need. The first one, and the most important one, positive trend momentum of 3 or more. If 2 sectors are tied for second place, we can break that tie using our total count. Let's check out what the results for that strategy look like from January 2022 to near the end of September 2023. So if we look at the results, we have 44.87%. SPY was down 4% over that same period of time. Let's check out Tuesday. To do that, all we have to do is change the start date. Go from a Monday start date to a Tuesday. Once again, the results, SPY is down 4.3%. Our strategy is up 43.87%. So 44.87, 43.34. We can compare those now. So back in April, we had just under 30%. Both were around 30%. Now they're both around 44%. Cool, right? We're done. That's the end of the webinar. That's just chapter 1 of the book. Because I noticed something. And to show you what I noticed, let's look a little bit closer at these backtests. It did extremely well from August of 2022 up until about March. From there, it's flattened out quite a bit. There is a lot of periods of time where it's not trading. When we see a flat line like this, it's not a sign that it's not having price changes. It's a sign it's holding cash. It's not buying any sector because no sector has a positive trend momentum of 3 or more. Let's see here. If we go to today, 1, 2, 3, oh, here you go. 4, 5, 6, 7, 8, 9, 10, 11. Out of the past 20 weeks, it has held cash. Sorry, not even. 18 weeks. 11 of the last 18 weeks, it has held cash. So while the returns look pretty good, it's not telling us the whole story. Because this is why. What it is telling us is this is why it's important to run and check backtests. Especially if we're looking back at a webinar, it is very, very important for us to rerun backtests. There was a question last webinar that someone asked me, so if a strategy stops working, do we have to rely on you to find out? The answer is no. For this strategy, this is a perfect example where we can look at a backtesting result and see it's holding cash a lot. Sure, there's not a lot of losses in that period, but let's see how our results change if we forget 2022 and all we look at is 2023's data. So we're going to run the same backtest, but we're going to start on the first Monday of 2023. Well, we're still beating SPY. We're about 4 or 5% ahead of SPY. But that's not the same. That doesn't look the same or feel the same as we saw when we did January 2022 to now. Let's look at Tuesdays. Maybe Tuesday's different. Same. Sure, we're still beating SPY. This strategy didn't go from hero to zero overnight. But what did happen is that it started holding cash way too much. And because of that, it missed out on potentially a lot of gains. So our results were 22.82% and 22.5%. And SPY was up 18.03 and 18.14%. We're just beating out SPY. So, this is where the story gets good. Because let's see if we can figure out why. And again, what I'm sharing with you all right now is not some magic story that I set up for all of this. This is exactly how I thought through looking at this strategy and figuring out what's going on and how can we improve it. And the beautiful thing is the only tools I used are the tools that are available to you. So this is where step 3's lesson comes in. forget the total return and only look at what we're trading. And we notice we're holding cash a lot. And as a result, we're missing out on a lot of trading weeks that could be profitable. So, can we change our strategy to hold cash less and invest more? And if so, how? Well, now we have to ask the question, what can we change? Again, backtesting we're not limited. We don't get 1 or 2 of these a day. You can run backtests to test different combinations until your fingers fall off. So, we need to ask, what can we change here? Well, we can change the start and end date, but we want to keep those the same. We want to leave the start and end date because we want to have these numbers to compare to. So what we can change is the top sectors each period. We can try only trading one sector per period. Because if we look, we're holding cash a lot, but there's also a lot of weeks we're only holding one thing. But that's not going to solve our problem. If we're holding cash, we're not holding anything. So we don't care if it's 1, 2, or everything. If we're holding cash, it's 0. So what we need to change is something with our positive trend momentum. And so obviously, what can we change on a backtest? Anything. But I want us to focus on the goal today. Improve this strategy, have it holding cash less, and have it become more profitable. So let's try and test 2 specific things. The first thing we are going to try is changing the positive trend momentum number to be smaller. So instead of 3, we're going to try 2, and we'll try 1. And the second is we're going to change how many sectors we're investing in. We'll come back to that one, but let's start off with the big elephant in the room. The positive trend momentum. After all, that's the strategy. The strategy is positive trend momentum. So let's look at how we can change and improve that. So first let's ask why. What are we trying to do by changing positive trend momentum? And let's think about the real reason. Step by step. Momentum shows us how the matrix changes over time. The matrix cares about prices. So it looks at how relative strength has changed, short term for X count, long term for positive trend. So positive trend momentum is changes in long-term strength over time. Long-term trends are harder to change than short-term trends. It's a little bit slower to move. So, if what we are finding is there aren't sectors that are having 3, 4, 5 positive trend changes in 2 weeks, maybe it could be that the market slowed down. Market volatility is lower. Sector ETFs aren't changing prices as much. So there's less changes in momentum. Is that true? Well, let's look at the S&P 500 Volatility Index, VIX. If we look at VIX, 15 is considered to be a normal, stable market. All through 2022, let's see if I can go longer. So, market volatility spiked during the pandemic, we know that. But it stayed above 15 for 2021, spent most of 2022 above 20, and a lot of that time was above 25. And in 2023, now we can go to this chart, we see that market volatility has pretty steadily been declining, to the point where since we did that webinar in April, market volatility has almost consistently been below 15, going as low as 12 at times. So, let's go back to the question. Has the market slowed down? Is one of the reasons that we're holding cash more the fact that the market is now slower? Yes, 100%. And that gives us this conclusion. There are fewer changes in momentum, and because of that, our momentum strategy that did really well in 2022 and early 2023 when market volatility was higher isn't sensitive enough for today's market. So, here is where we get into our tests. Let's change our backtest. We're going to change our backtest from the positive trend momentum of 3. We're going to change that down to 2. And we're going to run the same 4 backtests again. So all we have to do for that is we take our condition, positive trend momentum, of 2 or more 2-week momentum. Total count, doesn't matter what it is, we just want it to give us the highest one if the positive trend is the same. Cool? Let's go back in time now to January. We're going to test our Monday from 2022 results. Before we even look at the numbers, let's ask the question, did it work? Well, yeah, it did. It worked really well. Yeah, we still see a couple of weeks of cash, but that's normal. Most strategies will have some weeks of cash. But we got rid of those big chunks of just holding cash for months. So, mission accomplished. The return for this strategy, 31.78%. I'll show you the comparisons later. What I want to just do right now is run through these 4 backtests so that you're not thinking I'm pulling some numbers out of thin air for you. If we do it on Tuesday, we have 29%. If we now go to January 2023, %, and Tuesday for 2023, 40.26%. So, here are the 4 backtests. Monday, we have 31.78%. It's down from 44.87%. Tuesday is 29.87%, which is down from 43.34%. But that's comparing the 2022 data. Let's forget that and let's focus on the 2023 and see if that's a little bit better. In the results, we go from, and there are some slight differences in these numbers from what we just saw in the backtests, but for Monday, when I ran these earlier today, we got 40.3% profit for 2023, and that's compared to 22.8% from the positive trend momentum of 3. And Tuesday, we've gone from 22.5% to over 41%. So, we have worse 2022 performance, but still better than SPY. But almost double the returns for our 2023 results. This strategy, and let's think about this strategy, we are trying to make it more sensitive. Because of that, we are more likely to see negative results when the market was more volatile. That was the market where having that less sensitive strategy worked better. But now that the market is normal levels again, that slightly more sensitive strategy is yielding much better results. This is not rocket science. This is not some crazy idea that you need an advanced college degree to figure out. This is, I'm looking at a strategy, it's holding cash a lot. How can I change it? What can I change to have these results be different? We changed a single number. Positive trend 2-week momentum went from 3 to 2. So, let's now try changing it to 1. And let's see what we get. We went from 40.29% return for the Tuesday 2023 results. We went from 41.2% down to 28.7%. Too sensitive now. If we try on Mondays, we went from 40.3% down to 23.9%. Again, large difference. This change isn't helping us at all. It's too sensitive once again. This, again, is something that everyone can do. If you're watching any of our matrix strategy webinars in the future, backtest it. Look at the strategy, see if the results still are working. If you're seeing it's holding cash, or if you see results you're not happy with, make changes. These strategies are not set in stone. The market is constantly evolving. We try and stay on top of strategies to make sure that we are studying them and seeing how they're working in today's markets. But this gives you the power to do this as well. We give you the tools to test and improve strategies. So you don't need to wait for me to tell you it's not working. We give you the knowledge and the tools to test these changes for yourself and optimize them for your comfort and for your results. So that's what it looks like to look at a strategy, understand why it may or may not be working, and with one little change, greatly shift the results of that strategy. Again, we're talking 18% gain just from changing it from a positive trend momentum of 3 to 2. So now, let's look at that other part. Let's look at changing how many sectors we invest in. The question is, why? Are we changing it because it's holding cash too much? No, we already fixed that problem. Now we're just looking at something because, frankly, what's easier? Buying one sector ETF a week, or buying two and balancing your portfolio between these two different securities? On one hand, you actually might like the buying 2 sectors a week. It adds diversity. It makes it a lot easier to offset risk. If one sector has a really bad week, you have the other sector to hopefully counteract that those changes. But on the other hand, it's a bigger challenge. It makes it a little bit more difficult. And if you're just getting started, it can be a little bit more than you want to deal with. So instead of just saying, oh, it trades 2 sectors a week, I don't want to deal with that, do we actually need to buy 2 sectors? Can we just say, I'll take the strategy, but only buy 1 sector a week? Can we do that? Don't look at me for the answer. Look at backtesting. Look at the matrix. Do these tests yourself. So again, we're going to go back to our positive trend momentum of 2 or more for our 2-week momentum. And instead of 2 top sectors each period, we're going to do 1 sector per period. Daniela, using backtesting, how do we find the sectors that are performing good to select? So whatever conditions you're giving it are the steps that you could take to trade that strategy week over week to pick the sector. But down below in the data, you can see sectors purchased over on the right side, and that will tell you what sector ETF it bought that week. So again, really quickly, I'm just going to take this window over to the side and refresh it. All right. So let's put in our backtest once again, and we'll start off with our 2022 results. Top sectors each period. We're going to change this from 2 to 1. Positive trend momentum, 2 or more. 2-week momentum. Break ties using total count. What we get? 32.44%. And we also, if we change it to Tuesday, we get 40.93%. Cool. Once again, I will show the comparisons to the 2-sector version here in a few moments. Let's now look again. If we do this from January 2023, 38.7% return. And if we look on Tuesday, 45.65%. So once again, the results. If we change our backtest to only show 1 sector per week instead of 2, here's what we find. So we'll compare the results of the 2-sector returns and the returns of the 1 sector, both using the same rule of positive trend momentum of 2 or more. Our Monday performance goes up from 31.78% to 32.44%, while our Tuesday skyrockets from 29.87 to 40.93. Let's think about this. Does that make sense? Yes. The reason, in 2022, positive trend momentum of 2 or more, we found to be a little too sensitive. It was picking up sectors that had a positive trend momentum of 2, when in reality it probably shouldn't have. By only buying 1 sector, we're still only buying the best sector each week. So the chances of buying that second sector sitting at a positive trend momentum of 2 is a lot lower. Now, in 2023, that works against us. Kind of. On Monday, we see the number go down from 40.29% to 38.7%. But Tuesday goes up again from 41.2 to 45.65%. So, should you trade 1 or trade 2 sectors? That's up to you. You have the numbers, and if you want more information than just these totals, come back next week, because we'll be plugging all of these numbers in and analyzing them in more detail. But for today, If you're sitting there, numbers are flying out of your head, and you're just looking at me like, why? Why should I care? Let me explain to you why you should care. The goal today was twofold. One, it's to show you that we can and should review backtesting results for strategies that we are using. I always say trust, but verify. I learned that from my mom, and that holds true today as well. Trust, but verify. We give you the backtesting results. We show you how to set up the backtests. We give you the backtesting engine so that you can go and do this for yourself and confirm or deny what we share in these webinars. And we should always be looking for ways to improve the strategy. We offer backtesting so that you can look for how you can change the strategy to meet your needs. If you can only trade on Tuesdays, optimize your strategy for Tuesdays. If you can only trade Mondays, optimize your strategy for Mondays. If you can only trade Thursdays, optimize your strategy for Thursdays. These strategies change as you change the values. And if the number goes down, don't be afraid. Good, you learned something, try again. Put in more numbers, test more theories. Many of the best strategies that we've created have come from us asking a question, not knowing the answer, and throwing it into the backtesting engine to find out for ourselves. That's the fun of it. But the second half, it was to show you that using a real strategy that I wasn't happy with the results for, and I said, how can we tweak it and improve it using backtesting? I didn't export the results. I didn't do any crazy math behind the scenes. I looked at the results, found a problem, thought about how to solve the problem, and in my opinion, solved it. We found a way of improving the strategy. We made the returns almost double what they've been in 2023. It is holding cash less. It is investing more. It is a more sensitive strategy. And guess what? If market volatility picks up again, maybe then we reevaluate and think about going back to the positive trend momentum of 3 or more. Now you are taking this strategy that we provide as a starting point and learning. You are learning to use it. You are learning to change it. You are learning how to change it. And then science, which is really all backtesting is, becomes art. And that's where the beauty of all of this comes in. And today, live, we got to do that together. So, what's coming up in part 4 of our Step into Sectors series? In part 4, we will cover actually exporting backtesting results and putting them into Google Sheets. We will do some basic analysis using our backtesting results to be able to better study these different backtests and have more ways of comparing them other than just looking at a chart and looking at a cumulative return. And we'll talk about why I've chosen these different numbers for us to look at. And then finally, I have a template to share with you where you can copy and paste in your backtesting results and have all of these numbers calculated for you for any strategy that you provide. So, that was part 3 of Step into Sectors. Before we go, I want to answer any questions there are in the chat, and then we will call it. Do we need to check the day before matrix closing data for these strategies? You don't need to check the day before matrix closing data. The data is 1 week delayed. So if we look, today is the 22nd, the most recent we can go is September 15th for the data. So 1 day in the market isn't going to dramatically change the results. But if, for example, you check on Monday we will have the 18th data for backtesting. So if you go in and check a strategy that trades on Monday, you will have one additional week added to the backtest? Great question. So right now, that's why I can do a backtest that ends on the 15th. So, if there are no more questions, then that's where we will leave things for today. If you're watching this recorded and you do have any questions for us, you can always email us at support@sectorsmadesimple.com. It's always a pleasure to chat with you all, get to show you why using backtesting can and should be simpler, and how you can take power of your own strategies and investments into your own hands and discover that strategies really can be that simple. So, thank you all so much. Have a great weekend, and we'll see you all back next week for part 4 of Step Into Sectors. Take care.